Morning, Matt. Mark Ashcroft, President and CEO of Aurelius Minerals. We're actively exploring for gold in Nova Scotia, the east coast of Canada, and really look forward to speaking with you today.
Fantastic. Good to have you on the show, Mark. I think I know one of your other directors. In fact, you're director there too, Maritime. How are things getting on over there, by the way? We must have a catch up.
I think they're going really well. I mean, they're further along in their in the process than we are, so they are working actively on the engineering work, and it's a really good project. Garrett's done a great job there, and I really enjoy working with them.
Cool. Okay, we're here to talk about you guys today. So, look, it's a new story to us, new story to me. We've never spoken or met before, so I'm kind of keen to dig into this one. So we're at sort of circa 12, 13 million market cap. Small, relatively new, but you've walked into a pre-existing property, right? So can you give us the background to how you've arrived at these assets?
Yeah, so it's an interesting setup. We have underground infrastructure. We have a 300 ton per day mill, tailings facilities, full infrastructure and utilities that were really built and designed on a very limited amount of exploration and drilling and understanding of the resource at the time. And in an attempt to do a bulk sample, the prior operators, having not fully understood the ore body they were trying to excavate, failed. They borrowed $5.5 million and were unable to pay that back. The lender took the asset over, and then we took the asset on from the lender, Sprott Resource Lending, who remains a very significant shareholder of ours.
And sorry, but who's paid for all of this existing infrastructure? That doesn't come with $5 million.
No, it had. So gold was discovered here in the late 1800s. I mean, there's abandoned mine openings throughout the property base. And then I would say the late 90s and the early 2000s, when gold sort of had that real comeback kick, money was put into this to see development. To put things in perspective, this development took on, there was only about 22,000 meters of drilling that had been taken on the property over, a period of years. When we acquired the asset, we've done 21,500 meters in just 15 months. The people, it was the old prospector developer model, is chase the quartz veins in the ground, we'll put it through the mill and we'll pay our way. And it didn't work.
Right. Okay. So there's a kind of long checkered history of people not quite doing the right thing at the right time and markets, right? But I want to sort of see, how much you know about what you're walking into. So presumably all of those people, you've inherited all of the data they managed to create, and you're now going about the process of trying to create some new data or reinterpreting what it is that's there, right? And we'll get into it in a second, but I need to start off with you and the team first. So give me a bit of background on you and the team who are actually doing stuff, not the kind of figureheads, but people working at what is going on here.
Yeah, I'm happy to do that. So I'm a mining engineer by profession. I'm a sixth generation miner on my dad's side. My mom and dad moved from Wigan in the UK to Canada in 68. I started going underground when I was 12 and started working on a jackleg drill when I was 18. Then I progressed through, paid my way through university, got my PEng, and was laid off and ended up in Australia, started playing rugby union, decided to go to the UK. I was a prop, and
I was going to make a joke. I was going to make a joke about your dad coming from Wigan. You look like the shape of rugby league, but you actually do. It's in the family, right?
Yeah,
fantastic.
My dad, if you believe it or not, my mum is the Mad League fan. My dad was a Union man and played for Oral, and he was a loose head, and so I stand almost 6 foot and about 275, 280 when I was playing Union, and I went to the University of Reading in the UK, did a Master of Finance, and believe it or not, I got a job at Barclays Capital, the investment bank of Barclays, on condition I played rugby for the bank. So I lived in London, I did mining and metals financing, moved to New York for a stint at Standard Bank, and then moved back to Canada in 2003, got into the brokerage business, and then in 2008 went back to industry. And in doing so, I developed a relationship with Sprott, which is how we ended up bringing Aureus into. And then my partner in this is Jeremy Nemi, a very seasoned geologist. Jeremy's another Sudbury boy, believe it or not, though we didn't know each other up north. He also went to Laurentian and graduated the same year I did. And he's had a really strong path. He started with Inco, then he went to into the consulting business. Then he was at Kinross, where he was manager of resources reserves. And then he was the vice president of exploration at Noront, found that Eagle's Nest and really expanded that. He was at Gold Quest, where they took a 300,000 ounce gold equivalent asset, took it to almost 3 million ounces, feasibility study, Agnico investment. And where Jeremy's strengths lie, Jeremy is great at assessing historical work and then reinterpreting it and reapplying it. And so he's really really key to this. And then we've got on the ground, we're probably unique for an exploration company because our general manager is a mining engineer, most recently the manager of mines technical services for Newmont at the Musselwhite mine. Great combination of engineering work, and then he went and consulted for 4 years, and then they actually recruited him back to be the chief engineer, and then eventually promoted him to mines technical. So that's Billy Grace. And then we've got a team of 4 geos on the ground who are executing every day. Morgan Silver, Morgan Verge, Neil, and Dylan. And so we've got a strong team actively working on the asset, and have been. We managed to, we took the asset February 2020, just in time for the COVID. And, we managed to build this team remotely. I mean, we didn't even get to the site until September 2020. And that's the month that we started drilling.
Okay. Great team, experience, recognize like a couple of names there. So you knew Sprott, or Sprott knew you of you. They found themselves in a position, as they do, occasionally investing in things don't quite work out. What was it that attracted you to this? Because, we see a lot of sort of retread, reboot stories in the market. When the cycle hits, you see a few more of these stories coming up, especially these smaller ones. So what do you, and given that the previous operators struggled to actually understand the geology, why did you think you could crack the code?
Well, it's twofold. I had the luxury of working as a lender, and then as a corporate finance banker, and then had gone back into industry. I had been the CEO of a company called Stonegate Agricom, where we took that. It was a private entity in the phosphate space. Sprott was a large shareholder, and so I've always maintained a relationship. It was I guess probably PDAC of 2019. And I was engaged in a conversation with one of the lenders from Sprott, and he was explaining this asset that they had taken security over. And I thought, you know what, if you need any help, I'm always happy to have a look and cast an eye on it. And so we actually went down to site, and we were doing a visit. And at the end of it, he said, why don't we put this into you? And I said, well, we don't have a lot of money right now. And he said, don't worry, we can. That's not the concern, but we want this to move forward. And you really sound like you know what you're doing, and what your team is really sound. That's what I do. I build teams, and that was it. And we really liked it, and so we took it on, and that's what it is.
It's interesting actually, because I kind of find it interesting, because obviously this project would be otherwise financially strapped. If Sprott would be sitting on it for goodness knows how long. So they need a team to come in and try and crack this. But the bit I'm interested in is not your enthusiasm for it, right? Which was palpable. But technically, when you looked at this thing, you say, well, hang on, we can understand why perhaps it didn't work out before. So we think we've got a very good chance of making this work, versus, we'll give it a go and see what happens, right? Do you know what I mean? You come at it with a degree of confidence. So where's that come from?
Well, I think we had the benefit of understanding how Atlantic Gold had approached things as well. So we'd seen that they had said, they made, progressive moves in Nova Scotia. Nova Scotia, the sort of rule we roll by is whatever the first prospector determined the model to be for that deposit, if you will, that's the existing model. And so very little sort of changes. And so you get into a mindset. And Atlantic Gold had changed that. They started doing complete hole analysis and identified gold in the sediments that hosted the traditional quartz. And so we said, what if we look at things differently? So we started sniffing around some of the historical core boxes, and we saw things that triggered, why was this not sampled? And so we sent them to be sampled, and they came back hosting gold. And we thought, you know what? In fact, between the two of the properties, the Aureus East and the Aureus West, if I'm not mistaken, I think we found almost 2,500 meters of unsampled, unassayed drill core sitting in a sea container or at site. And we saw, very significant gold inclusion. So that was our motivation. And then we've certainly progressed that further on with the amount of drilling that we've done. And, I think we've got a very serious opportunity here. We're very excited for it.
Yeah, okay, so you're seeing visible gold in some of the drill core, which was fantastic. It's underground, so it's going to be expensive, so you need it to be of a certain caliber. I mean, certainly some of the drill results you've been putting out would suggest that this is more than high enough grade to go chasing underground for. So do you want to tell us about maybe the four? I know you've got 4 projects. You've got a flagship project. So maybe we'll start with Aureus East, because that's where you're going to spend the time, money, and effort. So let's start there, and we can deal with the others after that. Okay?
Yeah, that works. So I mean, the Aureus East is a really interesting asset, and I say that because when you see that, gold has been left in a core box. And when I say gold left in a core box, like literally visible gold that was drilled in the 90s and early 2000s sitting there. And, you scratch your head and you ask why, because it didn't fit the model, right? So no one was thinking differently, if you will. And so we've started our phase 1 program in September 2020. And we've got about 2,500 meters of accessible underground workings right now. We've got the 300 ton per day mill, but those underground workings are a great starting pad to to really understand what you're thinking. And the first thing we realized on our first drill pad is we put our first hole in, and the orientation was off. So we thought, we were hitting limbs. We seemed to be off of the hinges. We were aiming for hinges because these existing workings literally sat on top of the hinge system. It's called a saddle reef system. And we thought, why are we drilling down and we're going over to the to the south? So we changed the drill by about 5-10 degrees, and we found ourselves drilling limbs in the north. So we reoriented about 5 degrees, and we started to hit the saddle, the hinge on the way down. And we hit, that was our hole number 3, where we drilled, about 750 meters of core length, down to a depth of 900 from surface. And I think we identified 30 zones in that hole alone. And, the key thing for me was, if the orientation was off based on the historical work, did they actually understand the orientation of this deposit? And then that further played out when, our hole 7 identified half a meter at 21 grams, per ton in the floor of the drift directly underneath the drill. And that was the drift that was excavated for the bulk sample. So these things started to talk to us. And I know that sounds a bit hokey, but you've got to understand, you've got to see what's happening. And that's where we continue to see, the presence of gold in every hole we've drilled, 49 holes and 2 wedge holes. And we've got 100% mineralization. That's unheard of. And we're able to start to put this image together. And remember, we've got Billy on the ground in Nova Scotia. So it's not geologists saying, "Ooh, we've got gold. This is great." I mean, we've got Jeremy, who is not just an exploration geologist, he's a resource geologist. So he's always thinking, how does this fit together? And we've got Billy saying, if it fits together, how can we get this out? So that's where our mind is always rolling. We're risk mitigators.
Okay, so all this core sitting in a core shack or a container, so a sea container, ignored. Maybe they ran out of money, couldn't get around to assaying it, whatever. You found it, so giving you some hype. You've identified this kind of saddle reef system was basically like a bunch of literally saddle shapes stacked on top of each other, right? And that's a picture you've been able to paint by reorientating the drill. But how many drills are going actually? Just give me an idea.
2, one underground, and we had one at surface.
So you've got presumably more drilling sitting, waiting to be assayed at the moment. Is that right? And how much?
Yeah, we have about 6 holes left in the lab. So we're not. We've the drills are off site now. We took the drills off site at the end of December, and we have 6 holes and about 720 meters of samples left to be assayed.
Right. So as then we're getting into so we'll come on to the other 3 projects in a second. But okay,
that's fine.
I'm just, again, the picture that you've been able to paint for yourselves is something. We've got 6 other holes coming in. I'll kind of fill in the gaps, and you're looking to do a PA, like get into a PA. Is there a resource you're aiming for? So resource, isn't it?
There's a resource, resource, and then PEA,
and then PEA, right? So the resource is due when?
So the resource is due at the end of Q1. That's our goal.
Okay.
But they say we can do it in 6 to 8 weeks, but I start to sweat every day that the final assays don't come in. I fear that the date gets pushed a little bit, but
right.
I'm still hopeful.
Okay. So what would you do in that scenario? Obviously, it's okay. Only 6 holes, but it would really complete that picture for you. You committed to, or said you would like to get this done by Q1. What do you do? Do you if the assays don't come back in these 6 holes, do you wait for the resource, because you know what that sometimes does, scares the market, or do you go ahead without those 6 holes? What are you planning?
I think those 6 holes are important. I think they're imminent. I think within the next couple of weeks we should have them, and obviously we'll obviously update the market appropriately based on that timing. I think that's one thing we have done as we get our information, and once we've got, and we're not a one-hit wonder, right? We've got holes, so you've got to build that cross section, and I think if investors go and take a look at our press releases, you'll see we use a lot of imagery because it's not a simple system for people to understand. And I sometimes say, what's the complexity of the story? And I say it's the simplicity of the answer. It's to your point. It's a saddle reef system where we've got the hinge, but then you've got these limbs, and these limbs they're the game changer for us. These limbs extend significant depth, and that's really where we're able to build volume. And there's more there than we previously thought.
I see. So nothing wrong with lots of visuals. It helps people visualize what you're chasing after. And we've seen too many horror stories of people sort of doing small step outs and drilling pretty much the same area just to make sure they hit their headlines. You're trying to build something here which can show scale of resource and your ability to understand how the heck you go about drilling this thing underground and mining it underground. So no problem with that. The bit I want to get to, which is resource comes out, to what do you do next? Because 12 million market cap, that's been a kind of, that share price thing has not been pretty in the last 12 months, right? So you got to get out and say, right, we're going to raise some money because we totally understand what we're drilling now. Is that the point of it, to fund the PEA? So
there's twofold here. One, this has really been discovery drilling. This isn't infill drilling where we're just trying to backfill some information. No, we've come in, and every hole we've put down has given us more information, has completely changed the geological model that was there previously. We've extended it significantly along strike. So we have true blue sky potential there. We've significantly gone to depth. We've demonstrated 30 zones in that in the vertical extent. And once we realized the significance of these limbs, we went and put the surface drill to the south, and we aimed and targeted these limbs, and we've extended them in width as well. Now the resource is going to focus. Well, it will utilize all the drilling we've done, but then we have what we call a key area. It's about a 500 meter by 500 meter square around the existing infrastructure, because the other unique element of our situation is we have a mining lease and a mining permit. We have an environmental approval that's being transferred over. Once we have a resource and we've got, engineering work around that, and we have a plan to go forward, then we have our industrial approval subject to compliance of all of our approvals. We can actually look forward on a path to production. So the key element is, this resource, then a PEA on that, and then we're going to do some more drilling to fill in that knowledge base in the resource for the underground, but then look to extend. Are there open pit open pit potential here as well on the strike length that we have?
Right. Like everything you're saying with regards to the drilling and the operation and it all good, right? The problem you're probably trying to solve. Well, tell me what the problem is that you're trying to solve, because I'm looking at the liquidity in terms of volume. Yes. It's low. Amount of shares held by retail, low, right? Getting institutions in at early stages is a good thing, and it's also, it can be problematic in the fact that.
Yeah.
Can we get some trading going here, guys? So, you know what I mean? So it's rock between a rock and a hard place, really. And you're an ex-market guy, right? So how do you solve that conundrum? Because you're going to need to issue more shares to get more retail in, presumably.
That's certainly the always the challenge, right? I mean, it's death by 1,000 cuts. We haven't had an issue getting capital. That's based on relationships and past performance. We may not see it all the time in the share price. The market's only as good as your last trade. But I would argue that the results that we've been able to pull forward are very significant, and it's message. I have to increase the message, get it out to people, and let them know there's a very highly qualified team here, lots of experience. We've got miners on the job. This is what I did. I grew up doing this, and so when we see this, we see the opportunity. And I'm a significant investor. I've bought and I participate in the markets. I probably own 650,000 shares, give or take, somewhere in there. We're committed and we're aligned with our shareholders. So we've got to get this story going. I'm hoping the resource is a trigger point. It allows people to then quantify what we have, in the ground, and at least gives us a starting point, because you don't need a great number of ounces to really move forward to, get a 30, 40,000 ounce producer, generate cash flow. And then fund that really significant blue sky potential. We're very similar in both geology and the geometry of the deposit to, Anaconda's Goldboro deposit. And in fact, we're using the same consultants. Goldboro, with 130,000 odd meters, whatever it is, I mean, that's a 2.5 million ounce deposit between underground and open pit. And I certainly think that's something that we can target from a quantifiable amount over time.
Well, it's a nice analogy. If that's the analogy, they're a great company, and they've come at it unconventionally, but we like that story a lot. Okay, but let me come back to this liquidity thing, okay? Because I get that you own a bunch of shares. I don't know how much you paid for them, but I get that you own some, so you're incentivized to make this thing work, right? You've got a lot of friends and family. You've got a lot of board and insiders, and you've got obviously Sprott sitting there with their chunk because they lost a bunch of money previously on this thing. So they want it to work, but they'll want to cash in at some point. So how do you manage that situation going forward? Because, the headlines look good in the press releases. They really do. We get the team is good and experienced, but how do you sort the share registry component, the liquidity problem, and you're going to need to raise some capital to go and keep doing what you're doing, which is, banging out these great results. So
how do you do it? To your point, we are eventually going to need, the money. And so part of that, we have, we've engaged a communications group to assist us in getting the messaging out. In fact, last week I spent, I had 8 meetings with analysts. And so trying to get some of that, the broker interest in the, in the story, because to your point, we've been able to do quite a bit ourselves. We'd, further, get some retail champions out there. That is certainly something that, we can do, and we can do that aligned, in the next, in the next fundraising. We can, hopefully maybe look for a broader retail element, to that. So that's certainly how we need to get it in. Now we are able to operate, very efficiently. I will say we get a lot of bang for our buck and our shareholders, investors' dollars. We certainly do. we managed to contain costs as tightly as we can. And so, I would like to get the story out, get the visibility. This is the first time we've done one of these with you, Matt, and I really enjoy the format, and I'm hoping that this is an opportunity for us to broaden our audience as well.
Well, it'll definitely do that. I'm enjoying the conversation too. Let's carry on. I'm just sticking with Aureus East. Okay, so I'm going to leave okay. You're saying, okay, I put my hand up and go, I understand there are challenges over here in terms of the mix of the registry and capital raising, but we're on it, right? That's what I'm hearing. We're on it. The good news is because we know what we're doing over here, we're showing what we're doing, 100% hit rate. People, I think, are going to be a little bit more enthused once they get to hear the story. So comfortable with that. With regards to Aureus East, obviously there's a massive infrastructure there. You talked about a 300-ton per day mill, and you've got all the utilities in place, and it's dewatered underground, and all kind of good stuff. With that, there's obviously a value one may try to attribute to that Red Book or otherwise, but does it come with any liabilities? Was that handed over by Sprott? Are you on the hook for anything if this doesn't work out, or annual cost for maintaining all of that? What's that look like for a company of your size? Yeah,
so we don't. It's an interesting. So the structure of our transaction is there are two success fee payments that we make to Sprott. The first is US $2.5 million. Once we publish a measured and indicated resource of 500,000 ounces or more. And then there's a second, which is 5.7 million US, that is paid when 12 months after we've published a feasibility study. And if we never achieve those goals, then we don't make those payments, and we actually give the keys back to Sprott. We can eliminate both of those payments within 3 years of the anniversary by US $4 million payment. So it's very favorable to us in the sense that we can elect at our option cash or shares. So every time we do an equity issue, we actually issue shares at the price to Sprott to keep them at their almost 19%. And that goes against those payments.
Got it.
So yes. So we've done about $1 million, give or take. It's already actually been paid off against that. So it's not an outstanding liability. It's not a debt instrument. It is, and with that, once we turn it back, the liabilities would go. But I expect that we will eliminate that $4 million, as soon as we can. And then we obviously, are on, and from a day-to-day perspective, we do pay the operating costs. So we pay the power for the compressors and the ventilation and the pumps and the underground. But that is also part of our, that's part of our exploration program. So as long as we're doing exploration, then we're able to utilize, in Canada, the flow-through shares to make those payments. So we're able to access that market.
So when was that agreement signed off?
That would be February 27th, 2020 was the date that we closed.
Got it. Okay. So you're about to put, end of Q1, you're going to put out a resource of 495,000 was what I'm hearing.
No, sorry. I'm like, wait a minute.
I'm joking. For anyone listening, I'm joking. No, the point is, it's in.
I get it. Less than the 500. Brilliant.
See what I did there?
I did.
Okay.
I did.
What are you aiming for? Because what do you want to do? Because obviously paying $2.5 million out is like, oh man. But at the same time, you want to be putting out as big a resource as possible. So what's the angle you're taking there?
Yeah, I mean, remember though, the resource that's measured and indicated, so it doesn't include, that inferred element. So, and we're not trying to game the system at all. I mean, we just, this was initial drilling, and we were drilling, and every time you hit a hole, you put a hole out, and you're hitting more mineralized systems. So, I think there was a historical resource on this of about 50,000 indicated and 100,000 inferred. We weren't really happy with that model, and we didn't, we couldn't tell what had been taken out. So we sort of dismissed it. We didn't make it current, unlike our other assets when we did acquire. So, it's certainly going to be a bigger number than that. I don't have a solid number that I can, sort of speak to. today, but it's, it's certainly something that I think will be, bigger than what was there historically and better information.
Right. Okay. But again, you understand what I mean? Because it's very difficult. It's kind of like you're putting a marker in the sand at that point and going, okay, correct. Here's our resource, guys. And they go, oh, is that it? Or they're going to go, well, this is the first of a few, but we wanted to put a mark in the sand. Telling that story is really important, that people don't formulate, preconceive what it is that you got there.
It is. And that's why I say, this is discovery drilling. So it's kind of, we're very unique in that we're going to focus, we've focused a tranche of the drilling in that 500 meter by 500 meter square around the underground workings. And that's really more focused to move forward, from an underground mining, perspective. But then this is a 4-kilometer trend on this, on the Aureus East. This is a very significant system, and we can see that it's growing in width. So as we start to move, further to the east, and I think our furthest drill hole is about 1.5 kilometers away. That's when we can start to look at, other assessments. Do we, to get this into production, generate the cash flow, really, drill on that, on the east, on the east trend. And do we, what do we look to, develop there for time? Because, this is a relatively small underground operation. It would only sustain, a certain number of tons that are going to come out of there. So it's certainly a great starter asset. And then, we'll grow from there.
Right. Because we've seen, different countries create different models. So, Australian companies tend to like to get into production as quickly as possible, right? We saw a fantastic one, Rock's Gold, last year, they bought, but they started with a 400,000 ounce, resource, right? Because it was 10 grams or above. That's a number. I thought average 10 grams, right? So they could, yeah. And that paid, the cash was allowed them to expand their drill program and eventually pay for a new asset. In Canada, a typical model is just drill to the edge of the envelope and let's see what the size of what we got here. So you're going early on this one, because I know you've obviously got a 43101, or a current 43101 over at, with the well, certainly you're talking about Aurelius West, Forest and Tangier with the 43101 of all categories 354. But we haven't talked about that today. Maybe we'll leave that for another day because I'm conscious of time. But yes, you've got a historic inferred of just under 100,000 ounces and measured indicator 58,000. You're going to need to be a big enough number to say, well, we think potentially we follow this Aussie model, get into production with these high grades we're seeing, and that could be cash flow. Is that the thought? I'm trying to understand the thought that I'm buying into as an investor.
Yeah, I mean, I think what you're buying into is you're looking at us trying to exploit the opportunity that's there, which is infrastructure, utilities, by focusing on, if we could find, if we could identify, and this is a high quality ounces, if you will. Those are ounces that we have really good confidence in and, could sort of find us, 5-6 years of good mill feed. That would be really significant, because then you can utilize, well, two things. One, we'll get a re-rating, and then you'll have hopefully a larger market cap, which we'll be able to access for straight up, continue this discovery drilling that we're doing, as well as focusing, able to move it out of the ground. So we don't need a monster resource, but we'll have this resource, I'm quite comfortable we'll have both underground and surface, input. So we'll be able to see this, broad mineralization that's in the system and allow us to focus on that path to production.
Right. So, okay, that bit's clear. Path to production, which you're involved with, is that the company I'm buying into? Or path to production for someone else to come in and maybe follow that business model?
Well, I mean, listen, at the end of the day, everything has a price, but we're paid to de-risk assets. That's what we do. And I would argue we've been early to that by bringing in Billy. We have a geological team that's not a lot of these people were production geos as well. They're not just straight explorationists, and that's a very different mindset. And, so, and we've got the skills, we've got the horsepower. And now it's moving this forward, and we'll de-risk this. If someone came in and said, Mark, this is the price that we'd like you to present to your shareholders, we can discuss that. But I think, the alternate is we have the skills and the resources, the human resources to move this forward. And I think we can get access to the capital once we've got that, once we're there. I mean, we have a relationship with Sprott Lending and others. And I was as I said, I was a project financier. So we do know where that pool of capital, exists.
Okay.
Just got to bridge this gap.
Okay, exactly. Bridge the gap. So very quickly on that. So the cash position today, or the last reported quarter, is what?
Working capital is about $1 million.
Okay, so you're getting to that point now. Resources important to you to be able to go and have that conversation with the market. Mark, really enjoyed today's conversation. We have to come back and talk about the other 3 projects and what you do with them, what the optionality on the table is with those, and possibly values and how you go about valuing stuff like that or monetizing it. Thanks again today. Do come back. Loved it.
Thanks very much, Matt. It was a pleasure, and I do look forward to telling you more.